Welcome to the Deep Dive, the show where we take your sources, articles, research, our own notes, and really try to pull out the most important nuggets of knowledge. Our goal, simple, get you well-informed, fast, maybe share a few surprising facts, and, keep it interesting. Today, we are diving deep into a major player in European defense, SAAB B. We're specifically looking at its Series B shares, SAAB B. And here's the big question driving our discussion today. In a world that's rearming, well, faster than ever, really, Swedish defense champion SAAB is flying high, huge record order book. But its stock price is already way up there in the stratosphere. Can its tech edge, its operational skill actually justify that altitude, or is it maybe flying a bit too close to the sun?
That really is the core tension, isn't it? Our mission for this deep dive is pretty straightforward. We're going to break down SAAB AB's business, its management, the financials, and of course, the risks. And like you said, we're focusing on that Series B share, the one traded on NASDAQ Stockholm. Just for context, this analysis is current as of June 18th, 2025, and we're using a reference share price of 444.75 Swedish krona from back on June 11th.
Right. And what you'll discover as we unpack all this is that, well, SAAB's operations look fantastic. They're really soaring. But that valuation, the current stock price, presents a pretty critical dilemma for potential investors. Oh, and before we really get into it, just a quick note. If you find these deep dives useful, please do like and subscribe to the stockanalytics.ai YouTube channel. Members actually get priority deep dives on the tickers you suggest in the comments, so worth considering. Okay, let's get started.
Business analysis.
So first off, what is SAAB, fundamentally? It's a premier defense and security company, right?
Yeah.
Their mission, as they state it, is to make people safe by pushing mental and technological boundaries. And they serve a global market, governments, authorities, corporations.
Exactly. And their money comes from, well, mainly three streams, about 60% of their sales. That's from long-term contracts for really complex systems. Think multi-year projects like the Gripen fighter jet or maybe the A-26 submarine. The revenue for those big deals gets recognized over time, which gives them, a lot of stability. And that's backed up by this record high order backlog, SEK 189 billion as of March 2025. Huge number.
Wow, okay. So that's the big systems. What else?
Then you've got service and support contracts. This is really important for recurring revenue. It covers things like maintenance, logistics, training, upgrades. It really helps build those very long-term customer relationships. And finally, there are volume-based product sales. These are items with shorter lead times like ground combat ammo, the Carl Gustaf system is a famous example, or maybe civil security solutions. Sometimes they act as a subcontractor too.
So it sounds like they're not just selling a plane or a sub and walking away. They're really embedding themselves as a long-term partner. How does that deep collaboration work in practice? Does it create those high switching costs you sometimes
Oh,
see?
absolutely. It creates immense stickiness, as you put it. Once a nation adopts, say, a Gripen system or an A-26 submarine, that's not just a purchase. It's a commitment stretching decades. Seriously, 30, 40 years sometimes.
Decades.
Yeah, because it involves pilot training, setting up maintenance depots, integrating the tech with their existing defense infrastructure, continuous upgrades, switching to a different supplier after all that. It becomes incredibly expensive, operationally disruptive too. So it effectively locks in predictable revenue streams from support and upgrades for a very, very long time.
That makes sense. A powerful model. So what are the key products and technologies creating this stickiness? What are their main areas?
Well, SAAB's strength really lies in a few key areas, technological powerhouses, you could say. In aeronautics, obviously the Gripen fighter is the icon, but don't overlook GlobalEye. That's their world-leading airborne early warning and control, or AEW&C solution, critical intelligence gathering.
Yeah.
They also have that partnership with Boeing on the T-7A Red Hawk trainer jet.
Okay, aeronautics. What else?
Then there's Dynamics. This division delivers battlefield-proven weapons, things like the Carl Gustaf rifle, the AT-4 anti-tank weapon, and the NLAW, which you've probably seen mentioned a lot regarding recent conflicts, plus missile systems. Surveillance is another core area, basically the eyes and ears of the battlefield. Think the Giraffe radar family and advanced electronic warfare suites. Then COCOMs. They are genuine world leaders in naval tech, especially known for the A-26 Bleaking-class submarines. These have cutting-edge stealth and, crucially, air-independent propulsion, or AIP, systems, allows them to stay submerged much longer. And finally, there's Combatech. It's an independent tech consultancy, but part of the group. Supports both defense and civilian clients, cybersecurity, digitalization, AI expertise. It kind of enhances SAAB's whole tech ecosystem.
So they're not just spread thin, they're actually dominant in some pretty high-tech niches. How does that position them on the world stage?
Precisely. SAAB is definitely a leading European defense company, and they have a significant global footprint. Now, they might not have the sheer size of, say, Lockheed Martin or Raytheon, but they absolutely dominate in those specific high-tech areas like AEW&C and advanced conventional non-nuclear submarines. They use this multi-domestic strategy, having a strong local presence in key markets, which helps solidify their position. And that massive order backlog, SEK 189 billion. Remember, 74% of that comes from international customers. That really tells you something about their global competitiveness.
You mentioned high switching costs earlier. That definitely sounds like a strong competitive advantage. What are the other key advantages they have?
Yeah, those network effects and switching costs are huge. Like I said, adopting a platform like Gripen is a 30-40-year commitment, powerful lock-in, predictable revenue. But beyond that, there's brand strength. They've got this legacy of Swedish engineering innovation. It's highly respected. And just to be clear, we're talking SAAB AB, the defense company, not SAAB Automobile, which, hasn't been related for ages and is now defunct.
Right, good clarification.
They also often offer lower total lifecycle costs. Their products are designed for operational efficiency, easier maintenance. So over the decades, the customer actually saves money compared to maybe a cheaper initial purchase from a competitor. And finally, their unique assets and capabilities. We're talking proprietary tech like GlobalEye, those Cockham subs with AIP, advanced electronic warfare. Plus, they're masters of systems integration, making complex things work together seamlessly. And they're really focusing R&D on AI and autonomous systems now.
That strong position, coupled with the current global climate, it seems like the industry dynamics must be pretty favorable right now.
Oh, absolutely. We're definitely in a structural growth phase for aerospace and defense. The geopolitical tailwinds are, well, immense. The war in Ukraine, rising tensions in the Indo-Pacific, it pushed global military spending to $2.4 trillion in 2023. That's the steepest yearly growth since 2009. And you have NATO members pushing harder towards that 2% of GDP defense spending target. It feels like a sustained rearmament cycle.
And technology is changing warfare too, right?
Massively. There's this huge technological transformation underway, autonomous systems, AI-powered electronic warfare, digitalization. SAAB is actually quite well positioned here. They even successfully flew a Gripen E fighter integrated with an AI agent recently. That's pretty cutting-edge stuff.
Well, the wind is definitely in their sails. But they're still up against absolute giants, Lockheed Martin, BAE Systems. How do they compete effectively?
It is an incredibly intense competitive landscape. SAAB knows it can't and doesn't try to match those giants on sheer scale across the board. Their strategy is smarter. They focus on being agile, on specializing, and offering that cost efficiency over the entire product lifecycle, particularly in niches where they have a clear technological lead. Think non-nuclear subs, airborne surveillance. It also means the barriers to entry for anyone else trying to get into these advanced defense markets are incredibly high. You need immense capital, huge R&D, you have to navigate strict regulations, build up decades of expertise. It's tough.
Okay, the business side looks robust. Let's pivot slightly and talk about the people steering the ship.
Management evaluation.
Yeah, SAAB's leadership is notable for its stability and really deep industry experience. The CEO, Michael Johansson, took the helm in 2019, but he's actually been with SAAB since 1985. That's a long time. And he's navigated this recent period of unprecedented growth extremely well, capitalizing on the surge in defense spending, leading to that record order book and improved profits.
That kind of continuity must be valuable.
Definitely. And it's reflected further down, too. The average tenure for senior management is around 9 years, and for the board, it's about 7.2 years. It suggests a very consistent long-term strategic view, which is vital in this industry.
And how do they handle things like capital allocation? With all this growth, where are they putting their money?
Their approach seems quite disciplined. The first priority is clearly reinvesting in the core business to meet this booming demand. That means scaling up operations, CapEx, industrialization, strengthening supply chains, and critically, hiring talent. They brought on nearly 3,000 new people in 2024 alone.
Wow.
Yeah. Plus significant R&D investment, particularly in AI and those next-generation weapon systems we talked about. Their M&A strategy seems very selective, more focused on bolt-on acquisitions to get specific tech capabilities. A good example is the 2023 purchase of Blue Bear Systems, a British AI specialist.
So reinvestment is key. How do they balance that with returning value to shareholders? What's the dividend policy like?
They aim for a sustainable dividend, targeting a payout of 20–40% of net income. For 2024, the dividend was SEK 2.00 per share, which is about a 25% payout ratio. That's fairly conservative, leaving plenty of room for that crucial reinvestment. They do have authorization for share buybacks, but it doesn't seem to be their primary tool for returning cash to shareholders right now. It's more for operational flexibility, like for incentive programs.
Okay. And if we look at a key measure of efficiency, like return on invested capital or ROIC, what does that tell us about how effectively they're using all that capital?
SAAB's normalized ROIC, looking over recent periods, falls somewhere between 10.2% and 10.6%. Now compare that to their weighted average cost of capital, or WACC, basically their cost of funding, which is estimated around 6.5%. That positive spread, ROIC, being significantly higher than WACC, is a clear indicator that they are allocating capital effectively and generating real economic value for their shareholders. Some peers might show higher numbers, but SAAB's performance here is definitely solid.
All right, that provides a good picture of the management approach. Let's crunch some of the core numbers now.
Financial analysis.
So laying out the financial basics, SAAB's market cap is pretty substantial, right? Somewhere in the range of SEK 250 to 262 billion. That puts it firmly in the large cap category. And looking at revenue, what's the growth story been like recently?
The revenue growth trend, especially over the last 5 years, is quite striking. It really accelerated after 2021. In 2023, for instance, revenue jumped almost 23%, and in 2024, it was up again, over 23.5%. Their trailing 12-month revenue, as of the first quarter of 2025, hit SEK 65.36 billion. And looking forward, management is actually targeting an impressive 18% compound annual growth rate, or CAGR, through 2027.
That is very strong growth. Is it profitable growth, though? Are margins holding up or improving?
Oh, absolutely. That's a key part of the story. As of TTM Q1 2025, their gross margin was healthy at nearly 22%. Operating margin came in at 8.68%, and net profit margin at 7.14%. What's important is that we've seen really strong improvement in both operating and net margins alongside that revenue growth. It shows their expansion is not just robust, but is also increasingly profitable and scalable.
Okay, top line and margins look good. What about cash flow? Free cash flow can sometimes be a bit uneven in defense contracting, can't it?
That's exactly right. FCF for SAAB can be, well, lumpy is a good word for it. It's because the multi-year nature of these huge defense projects, with large payments coming at different stages. For example, Q1 2025 actually saw negative free cash flow. But you have to look at the bigger picture. The underlying business is cash generative, and management has set a target of at least 60% cash conversion, turning profit into cash for the period 2023 to 2027. So they're clearly focused on long-term cash generation, even if individual quarters fluctuate.
Makes sense. And how does the balance sheet itself look? Overall financial stability.
It looks very strong, extremely stable. Their earnings consistency has been good and, importantly, accelerating, with really robust earnings per share growth recently. Their debt-to-equity ratio is incredibly low, just 0.26. That indicates a very conservative approach to debt. In fact, get this, SAAB actually holds more cash on its books, about SEK 10.4 billion, than its total debt, which is around SEK 10.2 billion. So they have a positive net cash position.
Net cash, wow.
Yeah. And their current ratio, a measure of short-term liquidity, is a healthy 1.32. Plus, the dividend, as we mentioned, is generally stable and growing. They've raised it for 5 straight years since 2020, pandemic exception aside, and the payout ratio is conservative, between 18–25%, leaving plenty for growth.
Okay, financially solid, operationally booming. This inevitably brings us to the perhaps trickiest part, valuation.
How does SAAB's current market price stack up against all this good news?
And this is exactly where that dilemma we mentioned at the start really comes into focus. If you look at SAAB's trailing 12-month price-to-earnings ratio, the PE, it's sitting at around 54.
54,
Wow.
That sounds high. It is significantly high. Compare that to its own historical average, which is closer to, say, 28 or 29. It's way above the broader Swedish market average of around 21. And it's much higher than major defense peers. BAE Systems is trading around 24 times earnings, Northrop Grumman around 17 times. So a PE of 54 clearly signals that the market has baked in some very high expectations for SAAB's future earnings growth.
Right. So beyond just comparing PE ratios, we sometimes look at intrinsic valuation methods like a discounted cash flow or DCF analysis. Now, for listeners, just briefly, DCF tries to figure out what a company is truly worth by forecasting all the cash it's expected to generate in the future and then discounting that cash back to its value today. Because, money later is worth less than money now.
So running the numbers through a DCF model, what kind of value does that suggest for SAAB?
Okay, so using a standard DCF model for educational purposes and putting analyst forecasts and SAAB's financial data, the estimated intrinsic value per share comes out around SEK 338.53. Now, you compare that number to the actual share price we referenced earlier, SEK 444.75.
That's quite a gap. It is. It suggests a potential overvaluation of more than 25%. Now, a huge caveat here. Any DCF model is incredibly sensitive to the assumptions you plug into it. The key ones in this case are that very high growth rate management's own guidance of around 18% compound annual sales growth through 2027, and the discount rate used, the WACC, which we estimated at 6.5%. Change those assumptions, even slightly, and the intrinsic value can shift quite a bit.
Understood. So, strong fundamentals, but a valuation that seems stretched, suggesting the market is extremely optimistic. How is the wider market, like professional analysts, actually viewing SAAB right now?
Market sentiment?
Well, if you look at professional analyst sentiment, it's actually quite cautious, maybe even leaning a bit negative right now. The consensus rating for SAAB among analysts covering the stock is generally hold or even moderate sell, and the average 12-month price target is around SEK 425.8 AIR.
Which is below the current price.
Exactly. It's below where the stock is trading today, and there's a really wide range in those analyst targets too, from as low as SEK 260 to as high as SEK 565. That wide dispersion signals a lot of uncertainty, a lack of agreement among the experts about where the price should be. And importantly, we have seen several recent downgrades from analysts, and they explicitly cite the rich valuation as the main reason.
So it really sounds like this dual narrative we touched on earlier is playing out strongly. How's the media covering SAAB? Is it the same split?
It really is. On one side, you get overwhelmingly positive news coverage about their operational successes, landing major new orders, that AI integration in the Gripen we mentioned, new strategic partnerships. Lots of good news on the business front. But then switch over to the financial reporting and the tone becomes much more cautious. They highlight the high PE ratio. They report on those valuation-based downgrades. It sets up this classic growth story versus value concerns debate right out there in the public eye.
Interesting tension. And are there any technical market indicators giving signals, like moving averages or short interest?
Well, short interest data for the primary listing on NASDAQ Stockholm isn't readily available or reliable, so we can't draw much from that. But looking at moving averages, SAAB's current price, that SEK 444.75, is actually below its 50-day moving average, which is hovering around SEK 468.470. That's typically seen as a slightly bearish short-term signal. However, and this is important, the price is still significantly above its 200-day moving average, which is down around SEK 435.442. That confirms the strong longer-term uptrend is still intact. So again, kind of a mixed picture depending on your time frame.
Okay, sentiment is cautious despite the operational strength. Let's shift focus now to who actually owns SAAB shares.
Ownership structure.
So who holds the shares? Is it mostly institutional investors? And are there any major controlling shareholders we should know about?
Yes, a significant chunk of SAAB is held by large, typically long-term institutional investors. Estimates range from about 31% to maybe 47%. But the really dominant player here is investor AB. That's the investment vehicle of the prominent Swedish Wallenberg family. They hold over 30% of the shares directly and, crucially, control almost 39.7% of the voting rights due to the dual-class share structure.
So the Wallenberg family has a very strong influence. What does that mean for the company and other shareholders?
It provides a huge amount of stability. When you combine Investor AB's stake with Wallenberg Investments AB, the family effectively controls nearly 48% of the total voting power. That gives them significant control over the company's strategic direction. In an industry like defense, which requires very long-term thinking and massive capital investment, having such a stable anchor shareholder is often seen as a major positive. But the flip side is that the interests of minority shareholders are, ultimately subordinate to the long-term strategy set by the controlling family.
Understood. Stability, but concentration of power. What about insiders? Are the executives and board members holding much stock, buying or selling?
Overall, insider ownership is actually quite low, less than 1% of the company. Looking at recent transactions, the activity has been a bit mixed. There's been some buying, but also some notable selling by senior executives. For instance, Gergen Johansson, who heads the Important Dynamics business area, sold a chunk of shares relatively recently on June 5th, 2025. That kind of selling by top management could be interpreted as a signal that perhaps they feel the stock is fully valued, or maybe even richly valued, at current levels.
Right, that's always something investors watch. Okay, we've looked at the business, the management, the numbers, the market view, the ownership. Now let's consolidate the potential downsides. What are the key risks facing SAAB?
Risk assessment.
Maybe we can frame this using a quick SWOT analysis. Strengths, weaknesses, opportunities, threats. Let's start with the strengths. We've covered a lot of these. clear technological leadership in key niches, that massive record order backlog, giving great revenue visibility, really robust financial health net cash, low debt, good global diversification, and that stable anchor shareholder, investor AB, seems like a strong foundation.
Definitely. But then you have the weaknesses. One is simply scale. Compared to the American defense giants, SAAB is smaller, which can sometimes limit its ability to compete for the absolute largest multi-billion-dollar contracts. We also talked about the volatile or lumpy nature of its free cash flow due to those long project cycles. And the big one we keep coming back to, the significant risk tied to its current high valuation and the extremely high market expectations that come with it. That's a critical internal vulnerability right now.
Okay, weakness is noted. What about the opportunities ahead? Where could future growth come from beyond just executing the current backlog?
Well, the biggest opportunity is likely the sustained growth in defense spending globally, particularly as NATO members keep pushing towards and potentially beyond that 2% of GDP target. There's also the opportunity for SAAB to maintain leadership in developing technologies for future warfare AI, unmanned systems, advanced sensors. They seem well positioned there. And strategic partnerships like the one they have with General Atomics to put SAAB sensors on the MQ-90 Reaper drone can open up completely new markets and customer segments for them.
Makes sense. And finally, the threats. What external factors could derail things?
The most fundamental threat is SAAB's inherent dependence on government budgets. Defense spending is ultimately driven by political will, and budgets can face cuts or shifts in priorities. There's also the constant, intense competition from larger, well-funded defense primes. And the aerospace and defense supply chain is incredibly complex and global. It's vulnerable to disruptions, component shortages, cost inflation, all of which can hit profitability, especially on those long-term contracts. Speaking of macro factors, inflation is a definite threat, potentially eroding margins on fixed-price deals signed years ago.
What about things like interest rates or trade policy?
Higher interest rates increase the cost of capital, that WACC we discussed, which can put pressure on valuations across the market, especially for growth stocks. Although SAAB's net cash position does insulate it somewhat from direct borrowing cost increases. Trade policy is another one. Protectionist measures, like hypothetical U.S. tariffs, for instance, could increase costs for imported components or make SAAB's products less competitive in certain markets, potentially disrupting supply chains and accelerating their need to build more multi-domestic production.
Okay, a comprehensive look at the risks. So we've covered a lot of ground. Let's try to bring it all together now. All right, so synthesizing everything, the bull case for SAAB looks, well, exceptionally strong on many fronts. This is a company directly benefiting from a major global trend increased defense spending. It has a record order backlog that provides outstanding revenue visibility for years ahead. Operationally, SAAB is a world-class technology leader with a powerful economic moat in critical, high-growth defense niches. Financially, its balance sheet is incredibly healthy net cash position, very low debt, and strategically, it benefits from the stable, long-term perspective provided by its anchor shareholder, investor AB. It's a high-quality operation.
That's a compelling bull case. But, as we've discussed, there's a significant counterpoint. What's the essence of the bear case?
The bear case really boils down almost entirely to one critical factor: valuation. The stock is trading at a very significant premium to its own history, to the market, to many of its direct peers. This high valuation implies the market has already priced in extremely high expectations for future growth and profitability. There's very little margin for error left. We've seen recent insider selling. We see cautious analyst ratings, both pointing towards concerns about this rich valuation. And underlying it all, you can't forget the inherent dependence on government defense procurement cycles, which always carry some level of political risk and unpredictability. And just to circle back to that intrinsic value estimate we discussed again, for educational purposes, the DCF model suggested a value around SEK 339 per share. Compare that to the market price of SEK 444.75 when we looked. It highlights that valuation gap.
So putting it all together, what's the final outlook for you, the listener, considering SAAB today? It seems like you're looking at acquiring shares in a truly world-class company, one that's riding some powerful geopolitical tailwinds. But, and it's a big but, you'd be paying a price that already reflects incredibly high expectations for sustained, high-level growth and performance. The investment decision today really hinges on your personal conviction. Do you believe SAAB can not just meet these already very optimistic forecasts, but potentially exceed them significantly over the coming years? That's the bet you're making at this price. So here's a final thought for you to chew on. Given SAAB's unique technological strengths and its position in a world rapidly rearming, how much of a premium are you willing to pay for that kind of quality and growth visibility in today's uncertain world? And what kind of operational surprises, either positive or negative, do you think could genuinely shift this challenging valuation dynamic?
It really makes you think about that balance, doesn't it? The relationship between stellar company fundamentals and the price you have to pay for them, especially in critical high-growth sectors like defense. Sometimes the best companies aren't the best stocks if the price is too high.
Absolutely. Food for thought. We definitely encourage you to continue your own research and exploration. Please remember, this deep dive was generated by an AI system purely for educational and informational purposes. It should absolutely not be considered financial advice. Always conduct your own thorough research or consult with a qualified financial advisor before making any investment decisions. And hey, if you enjoyed this, don't forget to like this video and subscribe to the stockanalytics.ai channel for more deep dives like this one. Thanks for joining us.